Matt, let me start with something personal. You studied philosophy. Now, why on earth are philosophers the better investors?
Wow, I didn't know we would go there.
Sorry, I'm putting you on the spot right here.
Yeah, look, anyone who read philosophy at university knows that it's basically an exercise of reading incomprehensible texts from folks like Kant and Spinoza and Schopenhauer and translating it into plain English. And that is what we do in crypto. We take incomprehensible ideas like Byzantine fault tolerance and turn it into things that people can understand. So that's the core reason it's good training. The reason it's good for investing is it teaches you to drill down to first principles, and I think in crypto that can open you up to a lot of new ideas.
What a great answer.
Well, thank you.
If you had to explain your company Bitwise
Yeah.
to somebody here in Davos,
Yeah.
how would you best describe it in 1 or 2 minutes?
Well, look, in every specialized area of the market, whether that's private equity or private credit or bonds or equities, there's a specialist asset manager. If I say private equity, you might say KKR. If I say alternatives, you might say Blackstone. If I say bonds, you might say PIMCO. And the reason investors like specialists is because there's specialist expertise. Well, there's actually no asset class where specialist expertise matters more than crypto. And Bitwise is one of the world's largest, most comprehensive specialist crypto asset managers. We've been doing it for 8 years. We run some of the largest ETFs in the US, some of the largest ETFs in Europe. We run the world's largest crypto index fund. We're one of the largest providers of option overriding strategies. We have an alpha fund. We have a large staking division. And so investors can turn to us and know that for 8 years we've shepherded capital through all the volatility, avoiding the major blowups in crypto. And our goal is to be that specialist asset manager. There are a few other firms that do a good job. There are a few people who are up for that role. I hope that we're the winner and they're the seconds. But we're definitely in the conversation with the top 2 or 3.
Now, as I mentioned during the intro, you come from the field of traditional finance. What made you, switch the camp and run over to the crypto guys?
Well, look, I came specifically from ETFs. I was the CEO of ETF.com, built the first ratings and data service in ETFs, the largest ETF conference, sold that business. The thing about ETFs that people don't understand, now they're like the tiramisu of investing. Everyone loves them. But in the early days, people hated them. When we started ETF.com, they were called EFTs. The Financial Times labeled them weapons of mass destruction. There were congressional hearings in the US about whether ETFs were destroying the American dream and should be banned. So people forget all these things, but this is true. And what I learned from that experience is if there is something that is better, faster, and cheaper at a fundamental level, it will overcome the skeptics and win. And if you align your career with that sort of thing, you have enormous opportunities, which I had in the ETF space. So after I sold ETF.com, I looked around for pattern matching. What's the next financial technology that the world is skeptical of, that the Financial Times hates, that there are congressional hearings about, but which is inherently better, faster, and cheaper? Crypto is that. So I thought there was a lot of sort of career alpha in, by that point ETFs were well accepted, all the alpha was squeezed out. Why not run it back again with this next thing as it comes to be accepted?
Now, you mentioned Bitwise has been around for 8 years. 8 years ago, institutional investors weren't really interested in crypto.
Yeah.
What gave Bitwise the confidence back then to specialize in this segment?
Yeah, well, again, it comes from that core thing I mentioned at the top, which is developing a first principles understanding. We thought crypto was an inherently important financial technology that would win over time. And because it was so new, there were huge opportunities. We launched the first crypto index fund in the world. Today it's the largest crypto index fund in the world. I was mentioning in most asset classes, index funds are about 30-40% of the market. So by that measure, crypto should have $1 trillion in crypto index funds. We have $1 billion. We're off by 1,000x. So I was confident in the technological direction, and then the fact that we could be the first in a category that still, I think to this day, should be hundreds of billions or $1 trillion is just too attractive to ignore. So we knew that institutions would come. I'd seen it in ETFs with other asset classes. I remember when institutions laughed at gold before the gold ETF, and I saw that progression. I remember when they laughed at MLPs before those. So I saw that, I've seen that pattern again. It's really just pattern matching. All these things that we're finding out in crypto have happened before, and they follow this path, and sure enough, crypto's on that path.
It's hard to not have the impression that crypto still hasn't really come home yet. It's still not there. There's so many skeptics out there. To some people, you better not start talking about crypto, or they will put you in the same category as Epstein, whatever. Why is it that crypto has this incredibly hard journey when the idea, let's just take tokenization, of containerization, is so clear that it cannot be denied?
Yeah, I think it's classic anchoring bias. So I think it's behavioral science. Anchoring bias is the idea that when you first encounter something, you set up a point. And the vast majority of humans in the world first encountered crypto from a negative perspective, from Silk Road, from money laundering, from scams, from ICOs, from getting rugged, from losing money. And so they're anchored on crypto as like this bad thing. And what that means is that to convince them it's okay, I'll use an American analogy, you have to get them not past the 50-yard line, right? Not to where they're like, oh, it's probably better than not. You have to get them to like the 90-yard line, because they're starting from this anchored position of crypto is for criminals and bad. And I think that's really the primary problem we've been overcoming. We started way back. So something that's intuitively obvious for us has to be blazingly obvious. And we're just getting to that point. That's why we're in the hockey stick of institutional adoption. We've finally gotten there.
Let's take the opposite stance. You once said that people who sound most certain in crypto often fooling themselves. What does intellectual honesty look like in this industry? I mean, you have these extremely polarizing people that say it's either Bitcoin or I die, or it feels like a cult, like a religion, and it shouldn't. It's a financial instrument. Why is that?
It's completely crazy. Yeah, it's absolutely true. It's either ETH or it's Solana. People are so sure about it too. I think honesty in this approach from an intellectual perspective is humility, that we're early in this development. I spent all my time in this space. I have views on whether ETH or Solana is likely to win in stablecoins and tokenization, but I would not bet the life of my dog on that, because who knows? Like, it's impossible to know. It's context dependent, it's reflexive, it depends on the actions of people. To throw in a philosophical reference, it's sort of like a Popperian view of the world, that the actions will influence the future. So it's just completely unknowable. I think the only honest approach is to say we can't be certain of most of these things. I think there are the few things in crypto you can be certain of. Most of them are scams. So I actually think the best thing you can do as a crypto investor is weed out the negatives. I think that is possible. But on who will win in the future, I think it's just really hard to know.
As always, when there's new technology, I mean, we had 140 automotive companies in the US, we had 200 railway companies. Why should it be different this time?
It's never different.
But it's just that it's become so, it's like a fight between various camps. Like you said, Solana versus ETH. Does it matter? The question is, or the key objective is to use the technology. It's like the browser wars.
Yeah.
And when I started with Netscape, yes, sorry, I'm revealing how old I am, but it doesn't matter if you're on Chrome on whatever came in between.
I agree. Hey, I had a Betamax when I was a kid, so I remember that. And it's really odd.
Are you that old?
I was young. It's every community, even ones in dominant positions. Bitcoin is just now not jealous. I think Bitcoin is sort of now feels it's established, but even ETH is jealous. For some reason, ETH looks up at Bitcoin and is jealous of its position instead of admitting that it dominates stablecoins and tokenization and is a leader in that space. I don't understand that kind of like insecurity. It's very odd to me.
Yeah. I mean, let's talk about KPIs and metrics.
Okay.
I mean, you're the chief investment officer.
Yeah.
What metric tells you that crypto is getting more real than it was yesterday? What do you see that gives you confidence that we're on the right path?
I'll give you a couple. 4 years ago, I was not invited to speak at any wirehouse conferences in the US, the largest financial advisors. 3 years ago, I was invited to one. Last year, I was invited to all of them, but I was on a minor stage on a panel. And this year, I'm keynoting each of them. So there's one element of personal progress for you. I'll give you another one if you want a quantitative metric. I think stablecoin AUM net of the beta of crypto itself is a very good metric for real-world impact. I don't think you can look at stablecoin AUM alone. I think you have to net it for the beta of the market. But if you do, and it's exceeding that growth, that's penetration in real world.
Yeah. Well, I mean, the conference metric also matters.
Conference metric is very real.
Here at BFC, so you've made it.
Now I've made it, yeah. I'm a Davos man. Check the box.
Cool. In your crypto journey, was there one moment where you really had to change your view, your perception of how this industry works? Where you really had to take a step back and say, this is different than I thought it would be?
Yeah, all the time. Let me give you a recent example. I was wrong about price in 2025. I was right about what would happen on an adoption perspective and wrong about price. And what that gave me pause. I spent a lot of time thinking about why I was wrong about where the price would go. And what I realized was that I was not listening to the right people. I think brains work sort of like LLMs. They're dependent on what information comes in. And my information was exclusively the institutional community who's just rah-rah bullish. And so what I've done to correct that is over the last 2 months, I've spent a lot of time actually on Discords. I've spent a lot of time with OG whales. I've tried to introduce new views into my mind to get a better feeling for how the market is and where it is and where it's going. But that was an example where I thought institutions were all that mattered. Their scale would overwhelm retail and OG, and I was just wrong, as a lot of people were. And now maybe I have a more nuanced view. We're always trying to get a little bit better.
It's like when everybody expects something to happen, it usually doesn't.
Totally, exactly right. And there are other examples of that same bias that I had. I was skeptical of the Zcash XMR privacy coin boom, and I realized that I wasn't, again, talking to the right community, and Bitcoin had become more normalized, which created more space for the degen side of crypto, and I'm actually now pretty bullish on the most degen side of crypto for that reason, because we've dragged the rest of Bitcoin into the institutional community, and that's part of the reason we're seeing the growth in like privacy coins. So yeah, continuing to try to incorporate as many views as possible.
Yatsu earlier today talked about the extreme volatility in the market, and he welcomed it. But how do you stay sane in an industry where prices go up and down by 20-40% a week?
Yeah, I didn't have gray hair when I moved over to crypto. That's a true fact. You can Google it. I think after you've been in it for a while, and this was the same thing Yatsu says, your long-term view is that it's been up significantly. So I will say I joined Bitwise in February of 2018, and I knew the market was overheated. I expected it to come down, but I didn't expect the crushing blow of 2019. And I spent a lot of time revisiting the fundamental principles, making sure I was right in my core theses. But after you've lived through that kind of bear market and see it rebound, you just get this resiliency. My wife comes into the office all the time and asks me how crypto is doing, and I always say it goes up and goes down, sweetie, and leave it at that. So at some point, you just get used to it.
How do you make price predictions then? I mean, you said you would have expected the Bitcoin price to be somewhere else where it landed at the end of the year.
Yeah.
Because of institutional adoption. How do you make any statement on prices in crypto? I
mean, at the end, to go to that first principles thing, the price of something like Bitcoin is in fact set by supply and demand. I know we throw a million technical indicators and there were papers written on pricing Bitcoin, but in the end it's set on price and demand. So the way I arrive at pricing predictions is by looking at the outlook for supply and demand in Bitcoin and forecasting the input of excess demand over new supply and imagining what that price impact would be. We have models for forecasting the size of the impact and how it curves upwards. So that's the fundamental answer. The problem with that is that may be right in a various time period, right? But it's very hard to be precise on when that will be right. And so it's challenging. My conviction in crypto, for what it's worth, deepens almost to infinite confidence as the time horizon extends. But my view on crypto's price next week, I have no idea. I suspect we won't get out of $100,000 range until Q2 at the earliest. So don't invest in that, that's just wild speculation. But I think we'll be $1 million by 2032 or 2033. I feel very confident about that. I have much higher conviction in that than what the price will be even tomorrow.
Many people will say that the price of assets like Bitcoin are basically controlled by insiders and crypto whales or Bitcoin whales. Isn't that something that makes your prediction model super hard?
Well, you need to know to what degree those whales are selling and to what degree they're doing option overlay strategies that sell the upside. But that's actually like vaguely knowable. These aren't mysterious people, living on the beach somewhere. These are like people running around San Francisco who you can talk to. So it's not impossible to know how much they're going to sell. You can see it in the market. You can see it in the option skew. You can see it by talking to them. You can't get a precise feel, but it's not as distant as some people imagine. These are humans. Many of them are here in Davos. You could talk to them. You could get a feeling for it. And again, you can see it in the options. So I don't think it's unknowable. You can't know it precisely, but you can get it generically in the ballpark.
If you talk to wealth managers, there's still only a small part, especially in Germany, that are actively advising their clients to put at least 2% of crypto assets in their portfolio. What would you tell them?
Well, look, crypto is now part of the global financial universe, right? We're a $3 trillion asset class. And some of the largest investors in the world are invested in Bitcoin and in crypto. Ray Dalio's invested in crypto, Harvard's invested in crypto, Abu Dhabi's invested in crypto. The point I raise about that is, look, I'm an old Jack Bogle investor, and I think the starting point should be the benchmark global portfolio. If equities are a $110 trillion asset class and crypto is a $3 trillion asset class, if you're not like 2.8% crypto versus your equity position, you're net short. So I would say that these advisors who are still at zero are actually short this asset that Stan Druckenmiller says should be in every portfolio. I don't know, maybe they're smarter than Stan, but Stan's pretty smart. And maybe you should at least be neutral as a starting point. I think being at zero now is net short because it's now part of the institutional framework.
Was there ever a moment in the early days, like you said 2019 was your hardest year, where you thought maybe, just maybe, this whole thing will turn out to be a big scam? I'm not talking about tokenization, not digital assets, but Bitcoin.
No, not a big scam. No. What I worried about was the sort of existential threat that regulators and governments could have applied to Bitcoin at that point. I think a G20 ban on Bitcoin in 2019 would have been a bad moment. I remember walking around New York, going to meet institutions in the Trump 1 administration, which hated crypto, and they announced a major news conference on crypto. And I swear to God, I stopped what I was doing, I went to a bar and watched it because I thought they were going to announce that Bitcoin was illegal to hold in America. And so I walked in the bar, I was like, well, maybe this whole thing is up. So that's what I actually worried about. I never worried about the technology. I never worried about its long-term adoption. I never worried about its importance in the world. But I did worry that regulators would try to crush it. Now I think it's escaped that. I think it's beyond that. But I did used to worry about that.
Why is it beyond? Why are we past the point of no return?
All these Wall Street firms are investing in it. Larry Fink's largest money-making ETF is a Bitcoin ETF. I just don't think that the powers that be are going to tell Larry to shut down his cash cow. So I think it's gotten enough institutional adoption, enough sovereign adoption, enough endowment adoption, that those forces are very powerful. They're going to constrain the choice window. They could still make it hard for DeFi or easy for DeFi. They could make it hard for new layer ones or easy for new layer ones. But I think things like banning Bitcoin globally in a coordinated manner across the G20 are off the table because too many large, important people are now invested in this ecosystem. I think the same is true of tokenization and blockchain and stablecoins. I just think it's gotten too big, maybe too big to fail in that sense.
What a difference a few years make.
Right.
Jamie Dimon here in Davos talked about the evil of Bitcoin and crypto and that he would never touch this thing. And well, he did touch it big time. And it's amazing how it happened. I think my view is we really have to, if you talk to people, there is one aspect which is a technical aspect, tokenization, which just happens to run on the blockchain, and Bitcoin, but also Bitcoin has gone so far now. It's hard to imagine that we'll be waking up someday and it'll turn out to be just wishful thinking.
Yeah, I think almost impossible.
Let me ask one last question now. 10 years from now,
Okay.
and I know you philosophers, you have a long-term horizon. What would make you feel proud about your work at Bitwise?
About my work at Bitwise. This is going to be a cheesy answer. It's a cheesy story, but it's true. I apologize in advance, but it's true. In the end, what Bitwise does is it helps people invest in crypto. And what we'll be proud is if that helps people generate financial outcomes. I'll tell you a story of a letter I got last year from someone who invested in 2018 in our index fund when it was a private fund because they read something that I wrote. And he said that he just sold and he had 12x'd his money and he had built a house for his dad on his property so that he could live together with him. If I can do more of that, then I'll be proud.
Matt, thank you very much.
All right, thank you.